Audio morning brief for the U.S. grain markets. It's 8:17 a.m., February 22nd. I'm Rich Posson for Critical Point. Okay, so overnight the corn market did dip down to the level 4 bottom as I alerted you to yesterday. So it worked. It touched a trend line and then it bounced. Basically, I was using corn to actually hedge all grains across the board and lifted the hedge. I'm going to take a gamble. Yet this is another opportunity for a level 3 bottom, and the market is going to rally, and hopefully will rally into next week, even though it was supposed to rally this week. So it's still a weak market, still problematic market, but I'm pleased with this overnight trade here, bouncing off of that trend line on the lower side of that expanded bearish target. It met it, it's oversold, it's got some divergences here in the my favorite intraday indicators, suggesting there is a chance for this market to recover. Now, I think some of the trend line people will be concerned the market's probably going to top out around 416, but run your own trend lines. I'm just looking at the chart. I'm not drawing a trend line. And we'll have to be watching 5-day averages, 5-week averages, or whatever. But there is a potential here by next week to put this up into the 420s to almost 430. I'll give you a better indication of this or viewing of this in the video weekly update that I'll do this morning. All right, so that's the corn market until it violates the overnight low. I think I got to give the market a chance to go higher. Now, if it does violate the overnight low, we'll probably target at about 402. And I do know on the weekly chart, we can make a case of about $4, and that might be a nice round number where someone decides to give up. Now, something that might change the mood and psychology here for at least the hedge funds in the grains and maybe some of the other type of fund managers is that the stock market can be really hot this year. I think we're in a 1920s, roaring 20s scenario for the stock market, not necessarily for people, but I think we're going to have a good economy anyways. And I think this is also the 1990s .com or internet boom. Now, people, when they hear .com, they're thinking about the 85% crash in the NASDAQ, and they forget how bullish the market was. They forget that, the NASDAQ crashed and the .com stocks were wiped out, but really the overall stock market dropped much less, and the economy only had a little bit of a sneeze of a recession, okay? So that's how much of a difference you can get across the board in the stock market and how sometimes things just don't really impact the economy that much. My thoughts are some of these fund traders have been playing a game here of anti-inflation, but they also probably started playing that game of worries over recession. I think that most of them gave up on the recession quite a while ago, but they decided to continue to play anti-inflation. But now I think they're going to start thinking in terms of not necessarily high inflation, but just think in terms of this AI business by itself may create a booming economy and may therefore trickle throughout when even commodities can see some better support, the global economy can grow a little better, and maybe exports, imports pick up, the trade picks up. So I think they're going to, and obviously the closer they get to summer, they're going to think, should they step back and see if they can sell a nice bounce during the summer and bet again on the downside into harvest and maybe beyond. So I think we're getting close to a point here where they're saying, well, just how good to the downside can this be? We've already won by a large amount, okay? So hopefully this mentality is going to change. It may be very slow, but I think it's coming. All right, now let's go over and look at the March soybeans. Now this one, wouldn't you know it, the corn perks up and the beans slip, whereas a few days ago, the corn was looking so weak, and yet beans picked up, and frankly, I thought it was the beans that would be weak. Well, now they're weak. I think we're still got to just keep throwing darts here. I don't care if it's every day in the next few days. This thing is probably coming into a bottom, and it's going to be higher in March, but I have to warn you, the critical point calculations, because overnight it took out the bottom on February 15th, it does warn we might see 1140 on the soybeans, and that's the most I think. I don't want to be one of these guys that comes in 20, 30, 40, 50 cents lower every time a new calculation is signaled. I think it's a few cents lower and lower and lower. It's just too dangerous, in my opinion, to say it's going down huge amounts. What are you talking about? I just don't get it. I'm sorry, and if I'm wrong, and I'm the dunce of the group, that's fine by me. All right, so hopefully this is a bit of a test. That yesterday we got what's called preliminary supply, not yesterday, but a few days ago, a little bit of a bounce. And now we're coming into hopefully a selling climax that's not going to get emotional and volatile and high volume, that it's just kind of coming into a little bit of a bottom here. So I'm still going to give it a chance to pick its head up this week and extending that into next week for soybeans. But it is disappointing this morning. It is one, and we could be off, even though it's looking a little more optimistic. And I do think there's a lot of spread trading going on between the corn, wheat, soybeans. If the normal traders back off, don't need to do much, then those spread traders who are always there, they can actually control the market. We could see some weird things where, yeah, corn's strong today, beans are weak. Tomorrow, it's the opposite. We may see that, and unfortunately, we may still see price erosion. We need quite a few days of upside to really feel comfortable of any kind of a significant bottom, and we're just apparently not there yet. But there's a reason to be optimistic here, I think, at least on the corn side now, and I think probably the beans. I think later today to now tomorrow, the beans ought to be higher from a level 4 swing. So I'm hopeful it's going to bottom here, but I just got to warn you, it's still in a downtrend, no sign of evidence. It's not looking as good this morning as the corn, but they seem to take turns as if they're trying to trick us all of being optimistic. Now, the wheat market looks the best to me, and it should have been. I think there was a bunch of BS nonsense last week and knocking it down that hard. And I do realize some of that could have been over the Russia trying to sell more wheat, and Europe got scared too, and they went down. But I think the U.S. market is going to remain stronger than Europe. That probably means we're not going to sell a lot of wheat, but I don't think we'll ever be a big seller of export wheat. But our own market, we're eating good. Our economy is fantastic, except for the people who are on the new type of diet pill there. We should be all right in the food demand, okay? I think the flour boys and girls needed to get something bought. I think the funds have flipped here technically, and I think wheat's going higher into next week. I can see a level 4 pullback sometime today or tomorrow, but my guess is wheat will be higher next week. And I do think it's well in my price objective, but I think this has enough room to go to 604, and I'm hopeful that since wheat can be so erratic compared to corn and soybeans relative to rules of free markets and analysis, I'm hopeful it just explodes, frankly, because I think it deserves it. But whether it'll do it, I don't know. But I am friendly to the wheat market more than corn and soybeans right now. And I can't believe it, but I'm feeling more friendly corn than soybeans right now. And that's just because they're both taking turns flipping back and forth. But need more upside. We need all three markets to show some sustainability here for a few weeks in order to feel more comfortable idea that we ought to be putting a floor price in here from now into summer for these three markets. Past results and on the same indicative future results. And again, I'll be doing a weekly update a little bit later this morning, and that'll give you greater detail and better the visual of what we're talking about here for these swings. Thank you.